Congratulations! You just found the most comprehensive Vanguard Index ETF review available on YouTube. We're looking at every single one of the 87 different Vanguard Index ETFs currently available to investors. We'll break it down based on asset type, we'll look at expense ratios, the amount of the holdings, when these funds were launched, and most importantly, historical performance. And we'll also do what nobody else is doing, looking at all of these ETFs within the focus of historical performance adjusted for risk. It all starts right now. What's up, you guys? Welcome back to the Average Joe Investor channel. We're talking about Vanguard Indexed ETFs, and I just wanted to briefly tell you that you can get this spreadsheet we're gonna look at, and it is comprehensive. You can get this spreadsheet right now, today, for free by clicking on the link down in the description below. All right, here's the spreadsheet. And just for context, we did look at all of the Vanguard Indexed mutual funds in a previous video last week. This one we're looking at all of the exchange traded funds, or ETFs. We've got total stock market ETFs, we've got small cap, large cap, sector ETFs like financials, materials, information technology, we've got fixed income, we've got world bond funds, everything that Vanguard has to offer, we've got it here. Of the 87 ETFs, 56 of them are equity ETFs, both domestic and international, and 28 of them are fixed income or bond funds. Vanguard is all about diversification, so you can see a wide variety of the amount of holdings here, ranging from thousands of holdings, like you see with the total stock market, to as few as maybe 100 or as low as 72. And probably with some of the most comprehensive bond funds you can invest in, such as BND right here with 15,000 different bonds. Before we dive into the results, here are the assumptions we're working on. With all of these ETFs, we're starting with $10,000 in capital. We're going to look at 4 distinct time frames: the 1 year, the 5 year, the 10 year, and the 20 year, ending July 31st, 2025. All dividends along the way are reinvested back into more shares of the underlying ETF, and throughout the time frames, no additional capital will be added. You start with 10,000, we see where that 10,000 grows to. And with respect to performance, like I said, we are going to look at the Sharpe ratio, which is going to look at the actual returns of these ETFs, and we're going to look at volatility, we're going to look at standard deviation, and ultimately the risk-free rate and that Sharpe ratio. In other words, how well do you outperform just sticking your money in a 1 to 3 month treasury bond? And we'll look at graphs for all these time frames as well, and we'll separate it out based on equity and fixed income as well. Now here's a quick look at the underlying spreadsheet here for VTI, just as an example, and then we'll look at the actual total results. You can see we've got the master data right here for the entire ETF, and then we've got time frames broken out here. August 2005 through July of 2025, that's the 20-year time frame here. Then moving over, we have the 10-year time frame, the 5-year time frame right here, and the 1-year time frame right here. And with each of these time frames, as you scroll down to the bottom, you'll see that there documents out the risk-free rate, the average excess return, standard deviation, and then the annualized Sharpe ratio. Here along the bottom are all of the different ETFs we looked at, and as you can see, this took a while to complete. There are a lot of ETFs and a lot of data to compile. And by the way, all of the data here, the dates, the closing prices, the dividends, all of that comes from stockanalysis.com, where you can get the historical dividends and the history. All right, let's go ahead and dive into the results. We're going to start by looking at the 20-year time frame. Now, as you can see, we had fewer funds here. Of the 87, only, 23 of them had a 20-year time frame. So what we'll notice here, we're going to sort first by balance and then by Sharpe ratio to get the risk-adjusted return, because it might not always correlate with the total return. So let's go ahead and look at the total return balance here. Again, we started with $10,000. The top result was, and probably unsurprisingly, the Vanguard Information Technology ETF, ticker symbol VGT. That $10,000 grew into $174,000 over this time frame, 20 years. Second place was VUG, VUG, or Vanguard Growth ETF. Third place, much further behind, was VCR, the Consumer Discretionary ETF. In fourth, the Vanguard Large Cap ETF, VV. In fifth, the Vanguard Total Stock Market, VTI. And then the Vanguard Industrials, bringing up the rear here at VIS. Now, these are the top 6 here. The worst 2 right here down at the bottom, as you can see, were the Vanguard Energy ETF at $29,000. So it definitely went up, right? The $10,000 still grew into $30,000, or 3x the money. However, it did so over 20 years. And then we've got the Vanguard FTSE Pacific ETF VPL here, bringing up the rear. Now, if we sort by Sharpe ratio, we get slightly different results here. Encouragingly enough, the VGT returns still resulted in a Sharpe ratio of 0.68, which suggests, despite the fact that it went up so much, there was a lot of volatility along the way, and we'll see that in the graphs. Then we had 0.61 for VUG, and then consumer staples was the third highest at 0.60, suggesting that even though the balance was low at 61,000, the ride was much smoother and less volatility. But there's generally, I'd say, a correlation here between the Sharpe ratios here and the balances over here. What we also see was some really bad Sharpe ratios, relatively speaking. And we see the worst two coincide with VPL and VTE, quite a few of them down here in the 0.30 range. Now here's the graph for the 20-year performance returns, and it just so happens that all 20 of these were actually equity ETFs, so there's no breakdown of bond or fixed income here. This is the graph of this data, and you can see here that, everything was kind of mixed in together with each other till about 2016. So the first, 11 years, there was no clear winners here, though you could make the case that right in burgundy we have VDC, and then VHT in blue. And then we have the breakout right here in 2017 by VGT. And from that point forward, it was never really close. In second place at the end here in red was VUG, the Vanguard Growth ETF. And third place in pink, VCR. All right, let's take a look at the 10-year time frame. We'll look at historical performance first based on balance and then based on Sharpe ratio. The top result here was, again, VGT. $71,000, 10,000 going to 71,000, or 7x the money in that 10-year time frame. Followed in way distant second and third place here, really close to each other, were MGK, the Vanguard Mega Cap Growth ETF, and then VONG, the Vanguard Russell 1000 Growth ETF at 48,041. And then in fourth and fifth place, we had VUG and VOOG. Growth definitely led the way during this 10-year time frame. Scrolling to the bottom here, the two worst right here were VGLT and EDV. These were the only two, actually, of all of these ETFs that actually lost money during this time frame. They're both fixed income. They went from 10,000 down to 95 and 76. Very poor showing. We had a slight shuffling at second and third place with the Sharpe ratio included because VONG had a slightly higher Sharpe ratio than MGK at 0.78 versus 0.76. And really all of these other ones here at 0.73 and 0.70. We had some other close funds here. They didn't perform as well, but they had slightly less volatility, I'm assuming, which is why that led to a higher Sharpe ratio. Here's a look at the 10-year performance for all of the funds, fixed income and equity. We can see just massively outperforming here is VGT. We had red and blue in this situation here, VONG and MGK very close together. Most of these funds were in the middle, and we had some underperformers down here, including VDE down here, and a lot of fixed income down here at the bottom as well. Now, if we factor fixed income out, we can see the performance just based off of the equity, and you see it's a little bit easier to read, but still quite a few funds in here. Green outperforming, that's VGT. We've got VONG and MGK right here. The real underperformers from an equity standpoint are down here in this light olive green, VNQI, which is the Vanguard Global X US Real Estate ETF. And here's a look at just the fixed income. You can see far fewer funds here. The outperformer in this like burnt orange right here, that's VWOB. The real clear underperformers here, down here in purple, EDV, and then also in this dark red, VGLT. By the way, you guys know how I feel already about bonds and how they're just generally not a good fit in most portfolios anymore because they don't really give you that diversification and that different consistent performance like it may have used to in the way past. By the way, if you're looking for a great replacement for bonds and you want some really staggering information, especially adjusted for risk, then you got to make sure and check out the holding cash and selling cash secured puts back testing that I've done on IWM, SPY, and QQQ. I'll link to those down in the description. And there's a little video right here you can take a look at, but also I'll make sure and have an end screen as well, making all of those into a playlist. All right, now let's look at 5-year returns. This is from 2020, just after COVID rally, into 2025. And we're gonna sort first by portfolio balance. Again, we started with $10,000. What did that $10,000 grow into? Well, the top result here was the Vanguard Energy ETF. Kind of a surprise here. VDE at $30,000. And the next was pretty far away, actually. Vanguard Financials at VFH. In third, VGT, the Vanguard Information Technology ETF. Then we've got VIS Industrials ETF, Megacap Growth, MGK, VONG, the Russell 1000 Growth, Vanguard Growth, VUG, Vanguard Megacap, MGC, and then Vanguard S&P 500 Growth ETF, VOOG. Now, if we sort it based on Sharpe ratio instead, how do the results change? We have a different result at top. So interestingly enough, Vanguard Energy had 30,000 more than the others, but it had a lower Sharpe ratio than VFH and VIS, the Vanguard Financials and Vanguard Industrials ETFs. It also had a lower Sharpe ratio than the Vanguard Mega Cap Value ETF, MGV. these 6 here were lumped pretty close together here. These down here, 19,000 for Vanguard Value and 19,000 for Mega Cap Value, they're up so high not because they have high balances. They're not close to being in first place. However, the Sharpe ratio probably reflects reduced volatility compared to the others. And it also reflects these down here probably had higher levels of volatility. Look at this, Vanguard Information Technology at 23,000, pretty close to the top, however had a much lower Sharpe ratio, which suggests significant levels of volatility and standard deviation from the risk-free rate. All right, here's a look at the graph, and I admit there's a ton of data here, right? Here's that amazing, crazy outperformance by Vanguard Energy, and this I think right here, up and down and up and down and up and then down again and up, down, the whole time here, this level of volatility is what really reduced the Sharpe ratio, the risk-adjusted return. Clearly outperformed overall, however, not a fun ride, very bumpy. A lot of them sandwiched in here between, I don't know, $12,000 to $20,000 here in overall value. We had in green up here that was an outperformer, as well as lime green. Down here at the bottom, all of these definitely bond funds. Here's the breakout by equity only. I just went ahead and filtered down. I got rid of the energy because it was just one fund up there. We can see a little bit more breakout here, not by much, a very squished together lines. We have some outperformance here, VFH, then we've got in green VGT, and then in peach right here VIS. Clear underperformer from an equity perspective down here in olive green, VNQI. Here's the fixed income or bond portion here. You can see clear underperformance here. Pretty much all of them lost money except for maybe a few right here. VCSH ended up a little bit higher. In olive green, VWOB. Most of them here really underperformed though over the past 5 years. All right, lastly, the 1-year time frame from August 1st, 2024 through July 31st, 2025. And again, we're going to take first a look at the portfolio balance, then we'll look at the Sharpe ratio to adjust for risk-based returns. And we see that the top result here over the last 1 year is the Vanguard Communication Services ETF, another sector ETF, VOX. Now ended with 12,934. Second place, VOT, the Vanguard Mid Cap Growth ETF at 12,850. Then Vanguard S&P 500 Growth, 12,804. Then VGT, the Vanguard Information Technology ETF, which was consistently in all 4 time frames one of the top performers. Now, there's all of these up here are kind of grouped together above $12,000. Industrials, International High Dividend Yield, Financials, Russell 1000 Growth. Now, if we sort by the Sharpe ratio, right here, top performance was Vanguard Communication Services at 1.17, really strong Sharpe ratio. VOT's Vanguard's Mid Cap Growth at 109. And then we've got International High Dividend Yield at 1.01. And then just under 1 here, we've got the S&P 500 Growth ETF, VOOG. Some of these other funds still had strong Sharpe ratios, especially when you factor in how the actual S&P 500 did, VOO, way down here at 11,793 and a Sharpe ratio of 0.76. And VOO actually outperformed the Vanguard Total Stock Market Fund, VTI, down here, which is 11,736, and had a Sharpe ratio of 0.71, which was slightly lower. Now this 1 year time frame is just as convoluted, but maybe a little bit easier to read. All of the stocks here started at $10,000. There was a big drop here right around Liberation Day week time frame. Everything dropped and then everything popped back up here. The real clear underperformers were down here at the bottom in purple, EDV, and I like this teal here. VHT really underperformed, as did VGLT. Top performers up here are the ones we just talked about. Here's a breakout of 1 year performance for just equity. It's a little bit easier to read. We still have the clear underperformance down here, and that was the teal color right here, VHT. And here's that 1 year performance just for fixed income. Pretty much everything, about half of them made some level of money here. Right here's the 10,000 number here. I don't know, maybe 10 or 11 of them made money. The clear underperformer from a bond perspective was EDV down here. 10,000 turned into, what, 9,000? Lost about 10% over that year. Also forgot to mention these funds right here, we didn't even get to test at all, these 6 funds, because they were launched this year, which means we didn't even have the 1 year time frame. So, and they were all fixed income, by the way, so not sure we were missing much, actually. Now, every investor is different. Some investors are really looking for those growth funds because they're still really deep into the capital accumulation stage of investing. Others are looking for more stability, and so maybe you lean towards maybe a higher Sharpe ratio and maybe a little bit less in returns when you factor in the Sharpe ratio and some of those equity funds. Like I said, not really high on bonds, just personal preference based on the data. We looked at the data. We've looked at the data on other bond ETFs as well, bond mutual funds as well. There's just not really clear evidence for me to say, yeah, that makes sense, because you can do better consistently, at least over the past 5 years, with holding cash, collecting that interest, and also selling very conservative weekly cash secured puts on different indexes and still outperforming. As a reminder, you get access to this spreadsheet, the one we just talked about, for free. Just click on the link down in the description below. It's all yours. Hopefully you found some value out of this video, guys. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many of those comments as possible on the day I post a new video, and I'd love to get your feedback, your recommendations, your questions. Feel free to challenge me on any of this data here, guys. I really love to get your feedback. That's all I got for you guys. Have a great rest of your day, and thanks for watching.